Hello. So I thought upon the review of today's price action, I thought what I would do is I'd just do a quick video. So nice clean chart, and then I'd actually got this up here as where we would have the draw on liquidity, but you can see just where that's drawn to. So it's actually the low of this candle. So open, high, low, close are areas of influence. So if we start by having this on, obviously would have had that mapped on before this candle, and then the previous day's high, and then go into the 1 hour time frame. You can see how the price respects these. So this is Friday's trading. We finished here, so we've actually got a Judas swing here and a short opportunity on the smaller time frames here. So this is the dealing range, and then excuse me, taking targets down here, and then we've had another opportunity where we've actually had that run up, and what ICT was actually referring to, where we had a gap. I don't actually have a gap on this data because it's a different, slightly different symbol basis. So you actually get more data that way. But yeah, so when you go back to the 1 hour time frame, you've got this high that was taken out, and it's actually created this opportunity, and then we've got this one here, and then if you go to the daily time frame, you can see that the drawn liquidity for today was going to be bullish to close in some of this, and then I don't know, maybe come up here and then potentially up here, but obviously that's way in the future. So go down to the 15-minute time frame. This is the previous day's high, which we actually took here. So there's the previous day high, we've got this high here, we've taken that buy side liquidity here, and then we've paired that with the sell side liquidity, and then we've done the opposite here. So if I just turn on the order blocks, so this indicator, FX market, sorry, FBG, nephew Sam, there. What it would do is it will actually get rid of, so it deletes the boxes after they're being filled. So you see here, this is actually the fair value gap to the short side that got filled in, and then when you do that, that shows basically the remaining fair value gaps. So what I do is I'll highlight these two, and then we can have a look on the lower time frames, and you can see just how perfectly that has booked. And to be honest, I'm really starting to get a really good understanding about how it works. It's just like that ping pong backwards and forwards, but you're looking at those areas for the liquidity. It's just pairing up buy orders with sell orders, and vice versa. So go down to the 5-minute time frame. Nice and simple. So there's candle 1, there's candle 2, that fair value gap, and that's the entry candle. So order would have been there, stops at the high, and then the outside liquidity just there. It's actually come back down a little bit lower. So you've got cheeky 4.5% there in an hour and a half, not bad. And then you've got this one here. So your fair value gaps are actually still on. So ICT said we have this fair value gap here, which we broke to the downside, but we actually left this low intact. So then he said, when we come back up here, we're going to have see how it responds to this level, and if it goes up and it stays above this and comes back down to see its support, then we're likely to be taking the liquidity here. But he said if it goes up and then it takes some of this liquidity and then it falls straight back down here and then it sees this as resistance, we know then that we're coming down to take this low here. And if you look at this for an opportunity, so I've also got this other indicator, tool, because we don't use indicators, but yeah, FX market sessions, which I've adapted. So if it's something that you want to have a look at, let me know and I can give you the settings. But you've got your Tokyo high here, yeah, which is actually taking the previous day's high. So it's taken the buy side liquidity here in Tokyo. So the Asian session, this is the Asian high, this is the Asian low, and then the Asian session stops here. So in the London and the New York overlap here at 10 o'clock, what Michael also said is at 8:30 you'd have your line, that's where the hunting starts. However, so just there, however, because there was no red or amber news for today, what you would do is you'd actually wait for the 9:30 open before the algorithm starts to spool. So there you go, so there's your 9:30. We've created this 3 drives pattern, which is basically it's taking liquidity here, it's taking liquidity here, and then we've come down, we've taken this liquidity, and then he was saying that he would like it to come down further, which would have actually filled in this gap. So this here, where this has actually been drawn in, this was actually a gap on the futures. So, but if excuse me, if you were actually to just look at that even as a fair value gap there, what it's done is it's actually trading into this fair value gap, and it almost completely closes that gap there. Okay, so 9:30 we start watching. This is the first hunt, it's taken that, and then it's come back down below this fair value gap. And in the annotations, it does actually state from his Twitter feed on last Thursday, where it was really busy, that it's permissible to have price trade through it as long as it doesn't just refer back to what I've just said, basically. So it's come back down. You can see how it's actually respected it here. If you go to the lower time frames, this is like a clear retest here. You can see from these wicks how it's respecting this fair value gap. So although it's traded above it, it's actually come straight back down after taking this liquidity. And where does it want to pair this liquidity? So it's paired this liquidity with this buy side liquidity, and then this buy side liquidity, it's paired with this sell side and this sell side liquidity here. So now what we're looking for, if I just put on my fair value gap, so you've got candle 1, 2, and then 3. This is my entry candle because this one didn't trade back down to it. So this is my buy at the edge of the fair value gap. Stop loss on candle 1. And then targets would have been target 1 here. Okay, you can see how it's reacted, where there's loads of profit taken. And then second target here, and then third target here. So in a day's worth of trading, you'd have had 11.5%. So when I say a day's worth of trading, active trade open would have been 3 hours 10 minutes. Not bad, is it? But now this is starting to give you an idea of just how the market's booked. So we've just tagged that where we're heading next. Well, we look like we're going to be trading through this fair value gap here. We're going to be coming down to rebalance the price at this fair value gap here, and then we'll be, obviously that is the new dealing range, low to high, just on there. So we've got a fairly deep discount sell side liquidity here. This is a premium, so wouldn't really count that. This is also premium, so I wouldn't count that. So if you were getting short here, if an opportunity presented itself, then you're looking at taking profits here, here, and then outside liquidity here, if of course your box was bearish for the day. Anyway, I hope that helped, and let me know if you want me to give you a run through what these little tools are here, because although I don't have them on all the time, it is good to see where your session highs are, where your session lows are, and then where we're likely to be drawing to for that liquidity run.